Good morning, everyone. Thanks for waiting. We are live from our operating technical center in Belo Horizonte. Welcome to the earnings call with the presentation of Q2 results. Participants will be in a listen-only mode. At the end of the presentation, we will start our Q&A session. Questions should be asked exclusively using the chat box. We are not going to turn on the microphones for participants to ask questions. When you ask your question, please state your name so that we know where the question comes from. The slides will be available at our website, at the Relations Investor site, at the results section. We would like to say before proceeding to reinforce the forward-looking statements are based on the beliefs and assumption of the management of the company, and they are beliefs and assumptions of the management of Hermes Pardini. So future considerations involve risks and premises, and given that they relate to future events, they depend on circumstances that may or may not occur. Macroeconomic environment and other factors may affect the future results of the company and can cause results to differ materially from those expressed in the respective forward-looking statements. Today we have Roberto Santoro, our CEO, also Camilo de Lelis, our CFO, Alessandro Ferreira, Commercial Marketing Vice President, Adriana Linhares, PSE Business Executive Director, João Alvarenga, IT and Digital Executive Director, Fernando Ramos, L2L, Lab-to-Lab Business, and myself. I would like to turn over to Roberto Santoro, our CEO. You may proceed, sir. Thank you, Bill. Good morning. I would like to welcome everyone to another live presentation of the earnings call and for our investors. We are very pleased to present the results related to the second quarter of 2022. Before I turn over to Camilo Lelis, I'm going to present some figures for the quarter, and I would also like to share some highlights of the company in this period. First, I would like to make a comment about Fleury and Pardini merge. This is public information. On June 30th, we announced the most transformation M&A in our history, making a combination of our business with the Fleury Group. The operation is now being analyzed by CADE, the regulatory agency, and until this merger is approved, the management team of both companies will keep on their regular operations. It's important to say that this operation is extremely beneficial for both companies, not only because of gains in synergy, but also the potential growth considering how they complement each other from the geographical perspective and business types perspectives. I would like to underscore Grupo Pardini's superior efficiency and our national relevance in terms of diagnostics infrastructure, focus on technology, productive model, and logistics. We definitely can add a lot to Fleury and vice versa. Now, going back to our results, I would like to share with you that we have reached another record high in the level of tests for a quarter. So we haven't had a high growth in the number of lives in the network of HMOs, but still we have reached another record high in the level of tests for a quarter. In the second quarter of 2022, we totaled 41 million tests, 19% higher than the same period last year. It's worth saying that this growing increase in capacity is only possible because of the results of the enterprise project that we implemented in the past years, increasing efficiency and production capacity and ability to reach a new scale. I would also like to take this opportunity to thank all employees of the Pardini Group who were crucial to achieve these record levels. As to revenue, we were able to achieve the same level of revenue in the second quarter of 2021. Now that recurring tasks are being performed again, with the positive effect of recent acquisitions and price adjustments. In the second half of 2021, we've had surprising results because of two factors: a high demand for COVID-19 tests, and also changes in the legislation of toxicology screening, especially related to the periodic drug test. We have had a major growth in terms of the recurring volume, and that accounts for a recurring traditional market that is now recovering vis-à-vis previous years. In the second quarter of 2022, the ex-COVID gross revenue totaled 526 million, a record high, with a 16.7% growth vis-à-vis the same period of last year. Analyzing the quarter results, ex-COVID and ex-toxicology tests, the growth totals 26.6% in terms of volume. I would like to share some highlights of the PSC segment in our own business. Considering the results of the PSC business, in the second quarter of 22, we recorded a 15.6% growth vis-à-vis the same period last year. Ex-COVID, again, this growth totals more than 33%. Once again, this is a business that is growing despite the recession in the market, especially considering the reduced number of clients in HMOs. We have also completed the quarter with 182 PSC units in the states of Minas Gerais, São Paulo, Goiás, Rio de Janeiro, and Pará. The major highlight is Pardini's growth in the state of São Paulo. Our sales more than doubled when compared the same period of last year. In this quarter, we had CADE's, the regulatory agency's approval, and quickly deployed all 10 units acquired from Davita Serviços Médicos. And we also opened new units in the capital of the state and the metropolitan area of the state of São Paulo. So when we add those new units and also IACS units in the city of São José dos Campos, now in the second quarter, we have now 37 units in the second quarter of 22. It's a 600% growth. It's important to say that we're now in advanced negotiations to register those units in the HMO networks in the state of São Paulo. The Pardini Group is now a true option that is necessary for the São Paulo market. It's very diverse, very strong, that requires several service providers with efficiency and a strong brand. In the state of Rio de Janeiro, it's also important to highlight that there was an update in the registration of units in the HMO network, in the main HMO network, and this negotiation will be valid as of the third quarter of 22. Another important action was that we enhanced the mix of products and services of the brands we recently acquired. The Laboratório Paulo Azevedo units in the state of Pará now have services of vaccine. And the imaging clinic Dr. Odivânia in the city of São José dos Campos, we also integrated clinical analysis and vaccine services because of this increase in the mix that is more relevant both to customers and to HMOs. Now I would like to talk about the lab-to-lab segment highlights. In the second quarter of 22, there was a recurrent increasing in billings ex-COVID and ex-toxicology. And if we do not take those tests into account that had a high volume in 2021, we had a 21.1% growth. Without considering COVID tests, we had a 5.7% growth in revenue vis-a-vis the second quarter of 21. Back then, in the second quarter of 21, there was a significant demand because of a change in legislation, because of the demands for periodic drug screening, and also a high demand in COVID tests. So there was a growth despite ex-COVID and ex-drug testing, showing that lab-to-lab segment is very strong. This market requires several competences, great market share, growth, sustainability, and longevity to be able to operate in this segment. Also, the lab-to-lab business is very relevant and shows great potential. The volume of tests has grown by 14.7% vis-a-vis the second quarter of 21, the highest in the history of Pardini. Our market share has also increased, reaching a record volume of customers for a quarter. The average volume per customer grew by 10.6% in the second quarter of 22 vis-a-vis the last year, reaching the highest volume ever achieved. It's also important to talk about the success of our strategies to strengthen productions, especially the advanced technical centers that we introduced or integrated with new brands. Now working closer to customers also in terms of level of service and improvement of lead times. In the southern region, with the operation of the Solução Lab, we had an increase in the annual revenue ex-COVID, ex-toxicology of about 30%. In our advanced technical center in Fortaleza, in the Northeast, the expansion totaled over 27%. And again, regarding the Pardini Group, and before I turn over to Camilo, I would like to say about the awards we received. Once again, the Pardini Group is among the 5 most innovative companies in the category of medical services and received the Innovation Valor Award. We also rank among the most innovative IT companies. That's award conducted by IT Media. Not only is among the 100 most relevant companies, but it was also among the 5 top companies in the health segment. And for the 12th year in a row, we achieved the Top of Mind Award, one of the nicest and most remembered brands in the state of Minas Gerais. Once again, I'd like to thank you for your attention, and I'm open to questions later. Before that, I turn over to our CFO, Camilo de Lelis.
Thank you, Roberto. Good morning, everyone of the participants. Good morning, everyone, and thank you for participating in our meeting. First and foremost, I would like to ask everyone that just this quarter, 2022, it's a very special quarter where we should have closer attention to the analysis of results, especially if we compare to last year's results, 2021.
Pardini took the opportunity and of having these great results that were recorded in 2021 because of the COVID effects. Of course, these effects do not remain any longer, and it's very important for all analysts to use the investor relations area to analyze those results for the first quarter, and that will be a baseline for 2023. This is very important to say. So all positive issues that are mentioned, record increases in volume of lab-to-lab customers, efficiency in clinical analysis. We doubled the number of units in São Paulo. Many positive effects that will reflect in the results of the next quarters and also is going to leverage the results for 2023.
So the analysis now, we're going to basically talk about what we have publicized. Despite the decrease in volumes that we registered in COVID and drug testing for the second quarter, it's important to mention that 2021, during this period, the second quarter of 2021, the government issued the periodic drug testing. So we had a significant increase of volume in that period, which also collaborated for the 2021 results. And this now, we have those like state policies, and that would concentrate the periodic drug tests. It's important to understand those changes, those variations, because that'll lead um, uh, all of our results for the following year. Actually, all of these drug testing and COVID, we registered the same revenue, net revenue, that was recorded for last year. So let's look at it carefully. We came almost down to zero of the COVID tests this year, and still we managed to achieve revenue. Why? Because due to the growth in volume, lab to lab, especially clinical analysis for imaging, and that compared to what we registered last year, simply a record of in the recurring results that we have. So if you exclude everything that is extraordinary, the company is coming to normal levels of 2019. So growing compared to 2019. Uh, Comparing to 2019, it's clean. 2019, 20, and 2021, we had the effect. Obviously, all of these effects that we have for COVID, drug testing affects the gross margin and also affects EBITDA if you compare to the very same period of the prior year. But as positive points, we may highlight excellent record growth for volumes of testing in all geographies. São Paulo has extraordinary numbers starting this half year, especially now that we had the opening of the units where we negotiated with Davita, other units now that we have also opened in São Paulo. Another positive point was the integration, already 100% concluded for all companies that were acquired. Many of them are also collaborating for the results in the 2022 period. As Roberto has mentioned, we registered historical records of tests for the second quarter of 2022. In the second quarter, once again, we reached the highest volumes of processed tests in a quarter in the history of the Pardini Group, 41.1 million tests, reflecting in ex-COVID growth, 22.4% growth ex-COVID, comparing obviously quarter over quarter, second quarter 2021. If we consider the COVID tests, the expansion of volume was 19.9 compared to the second quarter of 2021. The COVID tests had the lowest historical volumes recorded in April. So out of all of the million tests for COVID-19, April was the lowest volume. In the quarter, the volume for COVID was 300,000 tests. So it's very little, very low compared to our history. In the lab-to-lab collection channel, we had volume records once again in the second quarter. There was a growth in recurring operations and ex-COVID in the personalized medicine, anatomy, and hospital support. For the PSC collection channel, it's worth pointing out a significant increase of 3 digits in volume for São Paulo in the second quarter of 2022. Even ex-COVID, leveraged by the incorporation of the new contract with the local HMO that started running in 2021 with the coverage of new units, consolidating all regions show ex-COVID growth. The gross revenue, we can point out ex-COVID, total revenue 529 million reais in second quarter. It was a historical record growth of 16.7 compared to second quarter 2021. If we exclude COVID and drug testing toxicology, the growth is even more expressive, 26.6%. The consolidated gross revenue totaled 558.7 million, basically stable compared to second quarter 21. COVID tests represent a gross revenue of 32.7 million in the quarter, almost 6% in terms of consolidated sales. Uh, so a highlight for the increase in sales, 51 million due to the acquisitions happening in 21. Paulo Azevedo Lab, APC Lab, IAX, and Dr. Odivania Clinic. Second quarter 22 for PSC, we present a growth of 15.6% of total gross revenue compared to the same period of the prior year. If we disregard COVID tests, the growth was 33.3%. Second quarter 22 for lab to lab, there was an increase in recurring revenue, ex-COVID and ex-drug testing. Disregarding COVID and drug testing, there was a growth in revenue of 21.1%. If we disregard only COVID, the growth was only 5.7 compared to the same period of last year. Gross profit, considering only recurring operations, there was a slight decrease compared to the prior year, around 8%. Obviously, everyone is aware that we are living through an inflation moment in Brazil, two-digit inflation. So our costs suffer significant pressure. So especially in terms of logistics and fuel. So it is it's a daily pressure in terms of rental, labor, all of those costs we have been trying to keep with a favorable negotiation in terms of our internal basket. Obviously, positive points of gross profit were impacted by the absorption of fixed costs with the volume, with the uptake and the growth of recurring tests. If you consider 41 million tests this quarter, so we're considering almost 170 million tests all in all. We have installed capacity of 180, 200 million. So we're very close now to installed capacity, which helps in absorbing fixed costs. We also there were acquisitions, M&As, and openings of new units, which added volume and revenue. Also, price adjustments for lab to lab and PSC. Negatively, we had increase in the cost of acquisition due to inflation, especially rentals. I mentioned logistics, fuel, increase in the costs due to new units in São Paulo. So you install total fixed cost. It's not 100%. You have to deal with that cost in the first moment, and then it ramps up in a longer growth ramp. We also had the impact of the labor unions adjustment for salary occurring now for the third quarter. So the gross margin of second quarter 22, there was a decrease of 930 base points when compared to the second quarter of 21. Obviously, that is going to be recovered from now on, because with increase in volume and all of the price adjustments and growth, we absorb that loss. EBITDA margin and net profit. Consolidated EBITDA reached 107.6 million for second quarter. Recurring operations showed a slight decrease in 4.9% compared to the second quarter 21. The EBITDA margin reached 20.7% in the second quarter, 29 in the second quarter 21. The loss in margin is due to the decrease in COVID tests and drug testing, besides the increase in fixed costs, capturing new clients, and inflation of 2 digits. Operational expenses with sales, general expenses, and admin, with the percentage of net profit was 11.2, very much sought after by the company's management. So our goal is to decrease that ratio of SG&A and net revenue. Compared to last year was 10.9. Much greater because of the COVID tests. And the increase is increase in expenses in IT. In the last months, we have had a lot of expenses in IT, especially in security. Incorporation of the expenses of SG&A of the acquisitions that we had at the end of last year. For example, LPA, APC, and IAX in the Odivania Clinic units. Most of that SG&A cost, there's a reflex of the reduction of personnel that we had due to the decrease in the COVID activity. So obviously, there's a significant effort of the company to diminish the overhead due to the M&As, so acquisitions. So we have been running a full cleanup in all areas and all processes after that. Net profit has reached 37.6 million in the second quarter. Net margin was 7.2, decrease of 640 base points compared to the prior one. But our tax bracket was 24.7, very good compared to last year's, which was 31.4. So we have been using all of the tax benefits and tax effects that we could use in that period to have a reduced tax bracket. Also in the second quarter, 22, we approved the payments of FCP of 5.2 billion. This has been approved. ROIC, excluding this was 38.7, retraction of 122 base points when compared to the same period of the prior year. Lower effect on our net profit. Operational results, positive results, and operational cash flow for Pardini was 46.6 million. We move forward with very much focused on for delinquency and disallowances as references. Delinquency, we registered 0.2% of net revenue, and disallowances only 0.34 of our gross revenue. So those are figures that everyone is seeking for those effects. They're very positive effects. This new moment now, we're very thrilled with the announcement of the joining of the businesses with Fleury that was mentioned. Two very healthy companies with a great track record in the industry, and they're complementary in their services. So we believe that this union will result in major generation of value for the shareholders, and the evolution in services and the streamlining of services to our clients for lab to lab and PSC. I'd like to now hand the word to the floor to our investor relations in charge.
Thank you very much. We'll now start our Q&A session. Mr. Biel, you have the floor. Thank you, Camilo. Let me remind you that you should use the chat box to send your questions. Please state your name if you're individual and your name in your company if you are an analyst. First question from Vinicius Figueiredo with Itaú BBA. He thanks for taking his question. My question relates to the average ticket. We noticed that there was a drop in the ticket because probably a reduction in COVID tests and toxicology tests. If we isolate those events, would the average ticket have increased? What about the transfer of costs related to inflation to HMOs? How is that being done? So thank you for your question, Vinicius. Along the lines of your question, my answer is yes, there is an impact that relates to COVID tests and also drug tests. And if we exclude these effects, especially in the lab to lab segment, if you take into account price levels, we observe a gain in the average ticket. Regarding the current scenario, as you know, HMOs have been through a period when they've had a very high level of use, claim rates were high, and also high costs associated to COVID. So this is a different environment right now, but HMOs also transfer their costs, and also all of us need to make up for the inflation effects. I would also like to highlight the gain in market share, especially in the lab-to-lab segment. If you compare 2019 with 2022, there was a high increase in the number of customers we've had in the lab-to-lab segment, especially in the latest quarters, and especially the last two ones, that represents an increase in market share. So considering the cycle of maturing and a ramp up, we have started with some customers that was not so specialized tests. They required more common tests, a lower average ticket. But over time, in average, maybe 5 or 6 months, depending on the product cycle, on the ability of specialization, there has been an evolution in the mix related to same store sales, and that has had an impact on the average ticket. And of course, there are acquisitions and also insertion of fixed costs in a ramp up, especially in the state of São Paulo. As we mentioned, we have expanded a lot in that state, and also because we are registering our services in new HMOs, and we want, of course, the market also want us to be registered in the HMOs networks. The HMOs scenario reflect the number of lives that they serve, the number of customers they serve, because they have had a flat number of customers lately, and we were not able to recover the two-digit growth levels we had in the past that showed an S-shaped curve. On the other hand, we have potential to resume such growth levels if we are able to recover the two-digit growth in the number of members that are part of HMOs, then diagnostic medicine services are likely to increase. And even there is even a risk of a gap and a shortage of those services. Thank you. Thank you, Roberto. Next question from Artur Alves with Morgan Stanley. How do you see the mix of products and volume in the PSC segment and lab-to-lab segment in the beginning of the third quarter? How do you see this behavior in the third quarter? I'll turn over to Alessandro Ferreira, our Vice President. Thank you, Artur, for your question. As Roberto mentioned, we have seen an increase, a significant increase in market share in the lab-to-lab segment in the last quarter. And that has been, as has been said in other calls, the migration in lab-to-lab segment follows the same behavior. Usually, the portfolio starts with a mix of services that are simpler, and then they get more advanced. So we start with more basic tests with lower tickets, not necessarily lower margins. And sometimes it's easier because of integration. And in this next quarter, we believe that the portfolio of the lab-to-lab segment is going to be more specialized. And as Camilo said, there has been a record level in the number of new customers that we serve in this segment. It was a significant increase. In the PSC segment, the mix of products is more stable. It is similar over time. However, as Roberto and Camilo said, our services were registered in a very large, the largest HMO in the state of Rio de Janeiro. So we expect to have an increase in the mix of services, especially for imaging tests like MRI, and the size of our operations will feel that. They will be reflected on that. And usually, when we get registered in an HMO, we do that for all lines of tests. And over time, we are able to increase more tests that we are able to conduct for those HMOs as we negotiate with them. So we believe there will be an increase and improvement in the mix in the lab-to-lab segment because of the behavior of that portfolio. I would like to add to what Alessandro said, focusing on lab-to-lab. Alessandro mentioned a point that is very interesting because once we have a new base of customers, we can work on this customer base. Over the past years, we have been able to specialize our sales team by providing them with more tools and initiatives that we implemented to be able to have a more specialized portfolio of tasks and to have a more specialized base of customers. I'm not going to go into the details, but just to give you one example, there is one example of something we implemented at Pardini some time ago. We have campaigns of products, like product cycles that we run campaigns for them. So, for example, for biopsy tests, so there are marketing and sales effort dedicated for us to be able to increase the penetration rate of products related to pathology tests. And these efforts have led to very interesting results. In addition to that, of course, there are many initiatives taking place to increase the mix of non specialized tests. Very briefly, I'd like to mention the decentralization of our production model because as we work closer to our customers, we improve the TAT time, the time to process exams. And because of that, we can improve the portfolio of tests with that customer. We increase our PPC, our level of products per customer. That's an internal metric that we use. We see that as very important. Roberto mentioned during his presentation the figures for the Northeast and for the South regions. Those have had a lot of highlights in the second quarter. And this is due to initiatives like that when the technical areas were closer to customers. So we're able to grow much higher than our organic growth and much higher than our average because of the strategy of working closer to our customers and also to get a more specialized portfolio. So these initiatives have helped us a lot in the past quarters. In July, for example, in an analysis, we realized that we are going along the same path, even a little bit higher than that. Thank you.
We have a next question from Stella from JP Morgan. She thanks for us. How do you see the recovery of gross margin and EBITDA for the coming quarters? What are the company's initiatives to decrease costs and expenses in the inflation environment? I'm going to hand this over to Roberto and Camilo. Floor first over to Roberto. Stella, good morning. Thank you for your question. Um, some initiatives are already ongoing. They're part of our efficiency cycles with a reduction of G&A. There's the effect that Camilo mentioned. There's an entire initiative and investment that was made for COVID. And that investment, given the low volume, it was a great investment that the company had benefits in terms of automation, headcount. So we have the efficiencies, not just in raising funds from the market and capturing clients. But another point is there's inflation within a base. We have to make it more profitable, um, given that it's a more tense environment for inflation. Third point is It's an improvement in the mix and the top line. So dilution of the fixed costs moving forward, a more profitable mix, and a bet on what was in terms of the drug testing that was lots of tests were held back due to the state DMVs. So there's a backlog to be performed in the second half of the year, and also in the specialized area, there's some adjustments and one-off corrections that might influence our profitability. If you want to chime in, Camilo, yeah, just adding. Uh, First, thank you for your question, Stella. Obviously, in the coming quarters, we are going to focus on capturing efficiencies in prices, especially due to fuel. For example, the reduction of fuel price in this quarter that has not been reflected in positive effects yet. The reduction on state taxes as well. All of these operations for renegotiating with suppliers and trying to fit the new measures that the government has put into action due to the to try to abate the inflation. So also our strategy of bringing the company to a level of fixed costs for the volume we're processing every day. When we increase the volumes, it was mentioned, first you start with more basic tests and then more specialized tests. The mix reflects also in the average ticket and pricing as well. And obviously, we're not going to survive if we don't fit this balance between cost and price, which is to have some of the inflation effects uh, um, moving adjusted forward. And as I mentioned, all of this will have effects on the second, third, and fourth quarters of 2022 and 23, even with greater positive effects. So those are the key effects we're focusing on to recover the margin in the coming quarters and coming years. Thank you, Camilo, for your kind answer. Roberto, this last question then concludes our Q&A session for the second quarter 2022 call. I then give the floor back to Roberto for his final remarks. Roberto, if you please. Well, thank you, BL and everyone. I'd like to conclude by thanking all of you for your time, for your presence in this call for results. And our investor relations area is at your service for any kind of feedback, interaction, questions that are necessary. And once again, we thank all of our employees, our directors of the Pardini Group who contributed for those results. For this, the healthcare industry dynamics in Brazil it's very tense at this moment. It is challenging, but there's a high rate of innovation and adjustments for the future. So thank you once again, everyone. Thank you all for your kind attention. This is the end of the interpretation. Thank you.